Okay, check, check, check. How do I know if this is working? All right, I guess it's working. All right, we're 5 seconds in. Um, so I wanted to bring up my technical analysis pre-planning for AUDCAD. This trade had already happened. This is what I landed on as far as my final technical analysis, and we'll go through all these points together. That way you get an idea of the process and what I look for before I'm taking a trade, because we're always pre-planning and the trade gets confirmed. But this was a little weird because after the second tap, it had this weird range that was happening. Eagle highs need to be taken out. So in my head, I was like, okay, take out these eagle highs, these liquidity points, hit extreme supply, which is here, you can see, and then we'll look for a breakout structure as long as we get a slow chop up. So let's go over that in detail. We're in AUDCAD up here. I usually start in the higher time frame just to get some context, so I'm going to go to the 5-day. We can see that it's mostly choppy, but it is trending down. So we're just going to look for some lower / medium time frame opportunities. Just going to skip right down to the 30-minute because that's what's most applicable, I think, sometimes. This is where it is now, but I found it like right about here. So I'm just using the replay bar here. So at this point, I'm just looking for some POIs, and POIs are mostly inefficiencies, which we call fair value gaps. So right here we can see a pretty big fair value gap from here to here. That's a massive fair value gap. So fair value gaps always confirm either created supply or demand. So right now we have definitely some created demand here, which is this entire order block. I'm going to zoom in to see if anything kind of weird happened, to see if we can get a true efficiency on the lower time frame. So we go down to 15-minute, 10-minute. Looks pretty clear. Continues to look clear. Alright, so right here it gets a little interesting. See if there's still the inefficiency is present, has not been mitigated. Okay. We're only going to go down to the 2-minute because I know that it hasn't been mitigated. So that's the inefficiency. Zooming back out to the 15-minute. Just going to drag this across. I'm looking for any expansions, as always. Right now I'm on the 15-minute. Maybe we go up to 30. This expansion is pretty obvious. Here's some more structure demand that's created, so we can look at that as well. We'll mark that up. Great. I'm actually going to zoom in on that as well, just see if we got any mitigation on these fair value gaps. Cool. So on the 3-minute we're clear, and I'm pretty sure even on the 1-minute, but it's gonna take a while. Sorry. All right. Oh. So it is not valid on the 1-minute. Not the biggest deal. I'm still gonna keep the POI because this barely hit. I could even move this demand to this point here, because it looks like, yeah, I want to see, that's an exact tap. I mean, that can go either way, but I think you get the idea. We're looking for fair value gaps that haven't been crossed over yet, and we see the market maker play here because they were able to move price substantially by these heavy expansions. So what I look for is I look for expansions in either direction, either towards the upside or the downside, and then I start pulling my ranges. I would not pull my range here. Here I would pull it here, and I'll show you why. We got some price exhaustion. You can clearly see some price exhaustion here, meaning the expansions are just becoming less and less. Because sometimes you can get faked out. Sometimes this point here could be a Wyckoff PS or PSY, I forget that technical term. It's different depending on which direction price is going, but it's the same thing. Like, it's like, okay, This is a PSY, so this could technically be your start of your high probability range. I did end up taking this one though, because when I look left I find a strong POI, but I'm just going to pull my range. Boom, there's my range. Mark up my first tap. My first deviation of the range, which is this point here, which is the Wyckoff deviation. Boom. We're going to extend our range to the second tap, as we always do. Boom. And we can start analyzing. We got a really clean return to zone so far. Basically, no speed, but no bumps in the road. Every supply or every demand creation has been mitigated. So once it reverses, it'll be a really smooth ride back down. We can kind of see that these are all equal highs. So in my head, when I'm analyzing this, I say, okay, these need to be taken out. So liquidity points, I'm equal highs like that, I'm sure they get taken out. And then if things start breaking below this market structure point here, you know, it's not going to get confirmed. So in my head, now I need to find points of interest in previous price action that make this high probability, because the range is not enough. So let's zoom out to the 30-minute. Let's look around this area here. So let's go into this area here. Start zooming in. I always mark my supply and demands up on the higher time frame and work my way down. So right here we can clearly see that this was created supply, and it did not get mitigated over here, but that's why we're going to go into the lower time frame. But we have our fair value gap. It's small, but you can see it. Here, I'll mark that up right real quick. Here's our fair value gap. That inefficiency confirms the created supply. Great. So now we can look for reactions in there. Now I'm just going to zoom in, see what's taken, see what's not. It might turn into structure supply, which is just higher probability. It did. So we have structure supply. So again, with structure supply, it's just like a fair value. It's just like a order block with a fair value gap, but now we just apply structure to it. So here we have a low. We're looking for 2 consecutive ascending candles to confirm structure. We can't mark this yet because we don't know if there's. We have to look ahead to see if there's 2 descending candles consecutive. So this is only 1, that would not count. Right here we see 1, 2, 3. Great. So now we got some structure that's building, and then we got at least 2 consecutive candles up to the next higher high. So clearly this is structure supply. I drew it from here because that's where the inefficiency is valid, which is great. Just keep zooming in to see if anything changed. Okay, so you see how this point is here? Now we can see that this was tapped. So that inefficiency doesn't work. So what I do in that situation, I just back it up to where we had it before, because that has created inefficiency. Could still be valid, but you don't know until you get a reaction. So I just keep zooming in, and you get the highest probability reactions from a true inefficiency, meaning something that hasn't been crossed. So if you look at the 3-minute here, it has been crossed up here, but if we follow structure, we can kind of see that, yeah, even this. So this inefficiency is not high probability because the structure supply has been crossed. But this here, see if we go down to the 1-minute, this is weird. Okay, so this might not be valid at all, but you don't know until you kind of get a reaction. So sometimes I just plan it out as if I'm going to get a reaction, bring it in. So it looks like it did hit 1. And then I'm going to back up our timeline to here so I can look at the second tap just to see. Well, that looks pretty clean as far as rotations, or as far as inefficiencies being taken out, but you can see an order block here for supply. You can see the created fair value gap. It looks mitigated, so it's not really that valid. Not valid. So this whole POI is not valid so far, unless I find something on the really low time frame, which we might. So we found something here. This order block still has an inefficiency. And I'm still really slow at this, and you'll probably learn it faster than me. This is technically the very first video I'm making, but I was just really excited about this price action and the analysis behind it because I thought it was interesting. Cool. So yeah, that's a true inefficiency. All the way down to the 1 minute, we still have an inefficiency. So chances are it's pretty high probability that you're going to get a reaction. Let's zoom out and drag that to our range to see if we can find anything worth it. All right. We're going to speed this up. Yeah, we'll speed it up by going to the higher time frame. Sorry. I don't know how else to do this faster. And I don't want to show the full thing yet because I want to show you where your boy messed up. I actually took an L on this trade because I didn't follow the rules and was an idiot. It was late or something, and I forgot about a very key point that I had already marked out. Okay, so pretty cool. Huh. That's our true inefficiency. For some reason I thought it hit it. Either way. I guess not. I think I used a 30-minute order block or something. I didn't find the true efficiency in my technical analysis like we did because I was like, okay, it tapped. That's what I found in that photo. Okay, so I'm looking at that, and then I'm also looking at market structure and liquidity points that might have gotten hit. So, or that I think that needs to get hit before I consider it higher probability. So here might be one. Here's one. Here's one. Let's just drag these across. What's going on? Right. Boom, boom. Boom, boom. Okay, so all those got taken out, which is just showing that's more high probability. So we can see a beautiful return to range or return to zone happening here, to where there's no roadblocks, there's no bumps in the road for the most part, and I'll show you what was happening. So if we look back at my pre-planning, it's like, okay, these liquidity points got taken out. We hit, I guess I didn't find the true inefficiency, but I found that 30-minute order block, and I said, okay, that's getting taken out. We have some created supply for our second tap. So once the second tap creates a POI, then we can start looking. So my plan was, take out this liquidity, come into our second tap extreme supply, and look for a breakout structure. That was the plan. So let's mark out our supply that was created. Okay, So this was the plan, and I'll show you what happened. So it starts going up, it starts following the plan. And this takes a while. You have alerts set the entire time, so I had an alert set here. Okay, pause. So this is what happened. I saw it turn into a Model 1 because it exceeded our second tap. So I thought that this was the third tap. I knew that there was created demand here. I knew there was created demand. I'm looking at it on all time frames to make sure I have it right. Created demand. Right, yep. You're just basically looking for all the fair value gaps. So right here, this is still valid because on the 5 minute, right, there's a fair value gap. It's clean. 2 minute, 1 minute, nothing. Okay. And this is a pretty low volume asset, which means low liquidity, so it's not high probability for these models, but I was just willing to take a shot. So as it keeps going, okay, see, hold on. So I had already entered. Boy was dumb and already entered. I'll show you where I entered. I just followed structure. I followed market structure. So I was like, okay, here we go. Here's my lowest market structure point. So I'm looking for a breakout structure there. I see an aggressive candle here, breaking structure, trending down, having created more supply because we got our fair value gap. That protects price technically, so I use this breakout structure, and I think I enter like around here. Even though I knew that there was a road, I thought there's a bump in the road. Like an idiot, I just entered. I think it was late. I don't know. I already had this marked out, as you can see in that one photo. And so what price did is it came in, it already hit. My created supply up here was already taken out, so at this point, I moved my stop loss to this point, and I ended up taking an L right there. I took an L. It wasn't a full L, but it was late, and I was getting ready to go to bed. The plan should have been adjusted. Like this demand needed to get mitigated, and then you can make your moves up. You can make your moves up, and then find the similar plan. It's just this had to get tapped. So what happened? It did exactly that. It created an equal high here. Created an equal high, which, you know, that could be your third tap. You're like, okay, third tap or whatever. Usually equal highs and equal lows need to get taken out, and that's exactly what happened here. Plus there was not a valid breakout structure, so you could have chose this as your third point now. Followed market structure, boom, 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 boom. So this would be the market structure that you're looking to break now, since it would be a smooth ride down. There are no bumps in the road. And it breaks, and it's aggressive. So you got your aggressive break, you got the 1 minute, you got the candle closing, you have created supply, protecting price, and it's nothing but a smooth ride down from here. It is just good to go. And I slept through this because I fell asleep after I took the L. I was like, okay, time to go to bed. But you can see that this would have been a really decent entry. It's a like a 6.04 RR or something like that. 6.13. And watch what happens while I sleep. And by New York Open, it's already hit the technical target. Boom. Done. Yeah, whatever, you get it. That was a 6.13. So yeah, that was fun. It's always good to learn. I didn't follow my own rules. You can see the pre-planning. I guess that supply that demand hadn't been created yet, but I did see it created and I did mark it out. I just didn't watch for it to be mitigated. And yeah, that's how you live and learn. But this is the very first video. Sorry for the poor quality. I'm pretty sure that they won't get better, but I will get faster on the TA. And yeah, this is